All right, let's dive right in. Today, we're going to crack the code on technical analysis. We're here to demystify it, to show you how it works, and really, how you can use it to read the story the market is telling us every single day. So here's the big question, right? When you look at a price chart with all its wild swings and jagged lines, is it all just random noise? Is it completely chaotic? Or is there actually something deeper going on? Is there a story hidden in there? A story about people? And that, right there, is the key idea behind this whole thing. Charts are not crystal balls. They're definitely not magic. They're simply a picture of collective human behavior. Every single tick up or down is a footprint left behind by the psychology of millions of buyers and sellers. All right, first things first, let's establish the right mindset. Because honestly, this is where most people get it wrong right from the start, and it is absolutely crucial to get this right. Now, this is such a critical distinction. See, amateurs, they try to predict the future. They're looking for certainty. They want to know exactly what's going to happen next. Professionals, they're playing a completely different game. They use charts to figure out probabilities, to find situations where the odds are tilted in their favor. Then, they just manage their risk.
Okay, so now that we've got our heads on straight, let's actually start learning the language of the market. And just like any language, you gotta start with the absolute basics, the alphabet of price.
And the most basic letter in this alphabet is the candlestick. Now, don't get lost trying to memorize a bunch of weird names. Just get this one simple concept. Every single candle tells the story of a battle between buyers and sellers during a specific slice of time. That's it. It's a fight in a box. And, every battle has a winner. A green or bullish candle means the buyers won that round. They push the price up. A red or bearish candle means the sellers took control and shoved the price down. The size of that colored body shows you just how big their victory was. But honestly, the wicks, those little lines sticking out, that's where the real drama is. A long wick on top means buyers tried to push the price way up, but sellers smacked it back down. A long bottom wick means sellers tried to tank it, but buyers stepped in and said nope and pushed it back up. It's the story of rejection, and it's so, so important. Okay, so we've got the alphabet down, the individual candles. Now it's time to start making words and sentences. Let's look at how these candles combine to show us the market's hidden structure. And that brings us to something called price action. It's not complicated. It's just the story of how price is moving right now compared to where it's been before. When you string all those candlestick battles together, you start to see the bigger story unfold. And this right here, this is basically the DNA of a healthy trend. In a strong uptrend, you'll see price push up to a new high. Then it takes a little breather, pulls back, but here's the key. It finds its footing at a higher low than before, and then it pushes on to an even higher high. That simple rhythm, higher highs and higher lows, tells you the buyers are clearly in charge. Okay, let's talk about something that trips up almost everyone: support and resistance. Amateurs get out their rulers and draw these perfect, razor-thin lines, but pros, they think in zones. These aren't magic barriers. They're just messy, psychological areas where the fight between buyers and sellers got really intense in the past. Thinking in zones instead of lines is a total game changer. All right, so we've got price action down, but what about all those squiggly lines you always see on the bottom of the charts? Let's talk about indicators, but let's make sure we're looking at them the right way from the get-go. Okay, listen up, because if you only remember one thing about indicators, make it this. They do not predict the future. Their only job is to confirm what price action is already telling you. Price is the main event. Indicators are just the backup singers. So what do they actually do? Well, they measure stuff. Think of them like a speedometer for the market, telling you how fast price is moving. They can help confirm if a trend is strong or fizzling out. But really, their best use is as a confidence filter. If the price is telling you a story and the indicator is telling you the same story, well, your confidence in that idea should go way up. Look, we could talk about charts all day, but honestly, none of it means a thing without this next part. This is the single biggest thing that separates the winners from the losers, and it has nothing to do with what's on your screen. It's all about what's between your ears. Just look at this difference here. It says it all. The amateur is obsessed, absolutely hunting for that one perfect magical entry point. The pro? They're laser focused on one thing, managing their risk. Amateurs try to avoid ever taking a loss, which is impossible. Professionals know that small, manageable losses are just the cost of doing business. It's a completely different universe. And really, it all boils down to this. Your number one job in the market isn't to make money.
it's to survive. You have to protect your capital. You have to stay in the game long enough for those high probability situations you're looking for to actually play out.
Okay, so how do we actually use all this stuff? How do we take all these concepts and bundle them into a practical, repeatable framework that you can apply to any chart, anytime? Here it is, a super simple 5-step checklist. 1. What's the overall market structure? Is it going up, down, or sideways? 2. Where are the key zones of support and resistance? 3. How is price actually behaving when it gets to those zones? 4. Do you have any indicator confirmation? And 5. The most important step of all, how are you going to manage your risk? And look, the key here isn't to build some super complex, genius-level system. The goal is to have a simple process that you can actually execute consistently without letting your emotions get in the way. A simple plan that you follow flawlessly will beat a complicated plan every single time. And really, that's what this is all about. The ultimate goal here isn't to follow some guru or listen to hot tips on TV. It's about developing the skill to read the chart for yourself, to understand the story price is telling you, so you can become a self-reliant, independent thinker in the market. So now you've got the building blocks. You have the basic tools to start reading the market story for yourself. The only question left is, what story are you going to read first?